General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. I ain't trade today. Now, I don't like this daily chart. And even just looking at what happened today, it was like boring looking. This look okay for a sale. If I don't like the daily chart, then I'm not interested. Especially when I want it to give me smoother order flow, or I wanted to use bullish and bearish levels. Like this fair value gap didn't hold. We haven't retested any level. We've been consolidating, push, consolidate, push. I don't want to buy in no consolidation. This push up was pretty clean, but we're not getting typical order flow where we come test the level, and react, and take a clean trade to the next level. Looks like we did hit that fair value gap though. So let's put that in the journal and let's get this entry done. But I'm choosing where I'm picking my shots. I'm not just pulling up trying to make something happen every single day. Stressing myself out when there hasn't even been a raid. So no raid, no trade. That's a lifestyle. That's not for giggles. Let's do this Forex Factory. Also, Powell did his testimony today. Let me do my screen grabber. But Powell's good. He don't never give you too much. He's a good talker, the best talker since Obama. And nobody out talking Powell. The art of saying nothing while answering a question should be studied. Tomorrow we got GDP and unemployment. It's Thursday. I'm actually excited for tomorrow if we can get a raid. Unemployment I expect to be good. GDP, yes, but they can use this event for manipulation regardless of the outcome. Her 30 red voter news. Prime time for hunting setups. Let's see if Powell moved the Fed watch, which I doubt. Yesterday it was like 80. Trump could have moved it. But anything Trump does move with Powell, I don't think he even wants to move it. We dropped 5%. We're still, hold on, wait. We're still in that same. We're not cutting rates on. It's not no dramatic swing. It's only 5%. It really don't mean nothing. Dropped insignificant 5% today. Still overwhelming. Lee, I just made that up. No rate change. Next meeting, July 30. Earnings, it's not even earnings season, but we still need to look a little bit. Micron had their earnings today. I remember Nike is tomorrow. Nike should do good because it's the undefeated brand, but it's not going to move the NASDAQ at all. So here, it's nothing significant for the NASDAQ. And basically do that because you never know. You don't want NVIDIA to sneak up on you. Dollar on the daily. I like dollar. Let me see. Is it finally doing up? I still want a retracement. Did we close this? We did. We barely closed it. We have economic news tomorrow. What I don't like is could have been a liquidity grab. But what I don't like is these gaps being left behind. I'm waiting to sell a retracement, not sell into an expansion. Today, NASDAQ. Okay. We found this fair value gap yesterday, remember? Price tapped into the high time order. It's the 1 hour. H1 fair value gap. Nobody closed. Let's look at the weekly. I believe the weekly is a flat top. It had a tiny retracement. No weekly liquidity has been taken from the left side of the curve. We have taken previous weeks high, previous weeks highs. We have a weekly volume imbalance we could be reaching to. Daily, real sauce is at. Okay, I had an alert here for the bounce. That would have had it interesting. Um, Also, it's a level to look for it. To if we get sales below it, like if we close below it and retest it, it'd be good for sales. This is still on here because we need a down candle. This daily candle is not impressive. In a situation like this, I would look for both sides of this candle to be swept for buys, buy under the low, for sales, sell above the high. I'll be wanting like a lighter color. That actually don't look too bad. That'll work. Centers work. Right is better. Right is cleaner. I think I'm on 10 down there. So I'm looking to fade the move. Okay, that'll work. That'll tell me when to get interested. Range is small enough. It's not too big of a range. We could hit this high, come back, and just get stuck in this big candle. We could hit this low and keep running for the hills, basically. Let's go to H4. H4 is very unimpressive. What a great day to not trade. This 4 hour is deplorable. Shout out to Hillary Clinton for that word. Good thing I took the day off. Based on my assessment of daily order flow. Kudos to me. Put that in the journal. Price engineer liquidity that we can use. Hold on, typing too fast. That we can use for a timed triggered trade with 8:30 news tomorrow. Let's go here. I do like we still got this bag here, but retesting that. I mean, it could be a draw. We really could come break this low IOFED and come up. Either way, we'll be ready. H1, our target will be the daily high because we're in bullish order flow. We could gap up. Our next level besides this is 50% of this gap. This thing be looking like it's forever ago, don't it? Let's get it 50% here from this wick to this wick. Should we do the whole? Nah, we just do 50% because I'm just looking for a target. I don't like a lot of lines either. All right, back all the way back over here. Can we see the whole week? We really don't need it. Here, target is 22, 578, 25. Consequent. Hold on, wait, so I can see it. Consequent encroachment of the H1 for FVG. Order flow is still bullish. On higher time frame. Alert said watching previous day liquidity for inducements. After news. Smoke screen. I actually have high hopes for tomorrow's order flow. We got Powell out the way. Trump has calmed down a little bit. We'll give him a day break before we allow him to spaz out and trade peaceful. All right, that's that on that. Y'all have a good day. Peace.